How's it going? Sorry I'm getting this video out so late too. For the next this past week and then for the next week or couple weeks, I got some other stuff going on, so might not be able to get back to people's emails so fast or these videos out. And then too on my portfolio model, I might not have the best timing on some of these trades. So if you're kind of wondering why slacking, that's why. But let's get on to this video. So Apple, finished 377 something, and so this didn't hold up. Came pretty close, but close isn't good enough. On Thursday, just made the comment I probably should elaborate on a little bit, but I also thought that Apple would just kind of stay in that range. The lower the open interest goes, the lower the strength is going to be for it to hold it. That's why this doesn't work on many stocks, but Apple is so highly traded. It's up there every single day on the number one, number two with Bank of America on options volume for single stock. So in all, 6,000 open interest really is not a big deal. There's not very much money on the line. You kind of got to start getting up to this 10,000 plus where it starts to matter. And so with that said, like, how would you trade something like this for the future is you would only want to pick like one side. Like, say you're used to doing iron condors where you would sell this strike and you would sell a call strike, a put and a call, then you would just want to pick one, sell this. If you're doing like risk trades where you can't have it go over, if they're just trades like, say, selling a covered call, or say you're short the stock and you sell a covered put, then it's not a big deal if it goes below. So something like this, you would just want to do one or the other. Up here, this is definitely going to have some weight behind it, where this, if it goes over, it's not the end of the world. It's not a big deal. Two, you have so much volatility in the market now. With the VIX up at 40, it's just a lot of volatility. And then two, an Apple, go over to its volatility, is up at 42. And this is normally only down at 25%. So you just have, the more volatility you have in the market, the more, things are just going to be all over the place. And another reason, let's go back to what happened during the week. So 360 was actually your open interest, highest open interest. It was a short week, so you kind of got to let it build up a little bit. So 360 goes above that, comes up on Thursday, touches 389, so you're up here, and then backs off. Just kind of like I've been saying, when it comes up here, it's pretty much time to sell. When it gets down here, it's kind of your time to buy. Figuring you're a long investor. And then what happens? So it comes down off that, and then why a lot of people don't hold until Friday options expiration is because just weird stuff happens. Like, you just never know. Like, at 12 o'clock here, Apple's already below that 380, but that Steve Jobs rumor comes out and takes a little dive. You just have a lot of weird things. So if you would have just sold, when Apple in the week opened up here, if you would have just sold these, and then Thursday, took all your time decay and closed out, you'd be fine. So that's why a lot of people don't hold until expiration too. With the weeklies, you kind of have to, but as far as monthly stuff, that's why people don't. Going with, I think I had a VIX thing up here I wanted to go over real quick. This is just in general market knowledge. So the VIX it's an annualized move. So if we're at a 38.5% VIX, it's saying over the next 30 days, the S&P 500 is going to move 38.5% annualized. So if you want to break that down into, well, how do you figure out a daily calculation? There's 252 trading days in a year. So you take the square root of that, and then this will break it down into a daily move. So we have a current 38.5% VIX divided by 15.87 gives us a 2.43% daily move in the S&P 500. That's not sustainable, and that means options, this is what the market is pricing in. So it's a great time to sell options because you just can't keep having, you can't have the market price in that's just really, really expensive market. It's not going to be moving 2.43% a day. So, as that's how you figure that out real quick. Just a little tip. Also, over here, I'll do a video Monday, but see how it was selling off all day. It just Apple was up in this range. That's why I thought about 380 it would expire somewhere in there. And then you had just it got sold off all day. Obviously with the market too and the European news with this volatility, things are tough to gauge. But you have here there was also the market was selling off when Apple jumped up here too, or one of these days. This is the September monthlies. Now look at what you have here is pretty unusual. So I want to see what happened. You have the 395 had 33,000 open interest, in the 400s the same thing. Well, that's their pretty much what their or volume. I'm sorry, that's what the volume was for the day. Your open interest right here is about the same. So these matched up, and they're the same exact strikes, the 395 and the 400. Well, that if these are opening positions, if this opens up, then that's what would have caused this. That's what would have caused it to go under or this selling. Because if these are opening positions, you're gonna have the market makers are gonna have to take the other side, or whoever is short those puts now. Because when you're short puts, you're essentially long the market. They have to sell shares off to hedge it. And so this is on the manipulation theory. This is like just market mechanism, how it artificially moves Apple. If you got rid of options, all this stuff would never happen. They're there. What are you going to do about it? But so that may have caused this. I'm going to look. I'm definitely interested, really interested to see what this was, if these were opening transactions or closing. So because normally you see just, at the money volume trading. So 380, 390, whatever. And these are way up here at 430, 435. So they're not even close. So that's really odd that those are trading that much. So I want to see what happened there. Going out to September, I'm sure you want to see. Let's go here. I think Apple's just going to keep heading higher because on the manipulation side of Max Payne, they're going to want Apple to expire over here. On the market mechanism side of it, when these start closing down, you have 35,000 open interest of them each, it's going to pull Apple up. It's going to start pulling it up. So I think bearing that these stay the same at these same strikes, it's going to come up towards this way. So just higher, we'll say, is the move. That's what I think will happen. So, and there's a lot of money on the line up here. I wish this wasn't here because I knew that was going to stall this. If this was down here, you'd definitely have a lot more power to get it over. But we will see on that. Another thing why I always use this 98% probability range, if not more, which is coming off a strike, going one more out of the money. Because if you're doing risk type trades, where it cannot go over, there's no reason to be selling here. Give yourself some room and sell one more out if you can't have it go over these strikes. And just to look in real time, because sometimes when all these misses, it misses by 352 and it went over by $2. 351 it went over by $1.59. So if you're making a trade where you just cannot have it go over, all these things barely go over. So 327 is 330, 343, 340. Anyways, so here's the actual results. I didn't update this week's, but as you can see, it has it'll be an 80% probability. There's no reason to come up. This is one strike out of the money, and look how, and this is what I use. If not more, go out more strikes. If you go 2 strikes out, it's 100% probability. There's not a losing time yet. So the further you go out, the higher your probability is. And that brings me to my last thing I want to leave you with. On September 2nd, sold a 335, 330 put spread for 23 cents. Apple's around 376.